And before we go, a bonus conversation for the call listeners. We know many of you are always looking for your next investment idea. So we're bringing you a deeper discussion with the leaders behind some of the ASX's emerging companies. Today, we're joined by Australian Vintage CEO Tom Dusseldorp. Great to have you with us, Tom.
Great to see.
So you've just secured refinancing through 2028. Tell us about this and how important it is to your success story.
Yeah, I think, I've been in the role now 1 year. When I took over as CEO, we had kind of a year to run on our financing with our partner. That whole strategy or that support was not necessarily aligned with the new direction. We announced a turnaround. We were focusing on our inventory, innovation, but we needed to bring our finance partners along for the journey. So for the last kind of 6 months, we've been working collaboratively around what those next 1 to 3 year plans look like. What kind of funding do we need? How do we secure it? How do we align all the covenants and all of the checks in line with that strategy? And so now that we've announced that we've secured it and we've secured it for 2 years with a 1 year option, we now have finance aligned totally with our strategic direction as a business. So it's a really big positive reinforcement.
Investors, though, have heard turnaround stories before.
Yeah.
How confident can they be in this one?
Yeah, I mean, it was all about the numbers. The half result that we announced showed us in decline and we'd never spent more cash. And we said in the full year we'd be in growth and we would save more cash than we've ever saved. So, that was always my measure at the half, was to say, don't judge us on the first, judge us on the full year. And the pleasing thing is with our refinance, we gave guidance for the full year to say we are growing. So we're looking around 4 to 5% growth in the second half. So minus 1.7 to a 4% to 5% swing shows the directionality of the growth of the business, which is a big tick. So we are growing. And the cash turnaround has been massive. So we have saved roughly 20 to 25 million in cash in the second half, but it's the same time last year. So we're on track to hit our free cash flow target for the full year of this financial year, which was a massive check that the investors wanted to see, that we could control our costs and our spending and at the same time drive revenue for the business. So those two metrics we guided that we would achieve in the full financial year.
And how quickly do you expect that business to move from stabilisation to that cash flow?
No, I mean, that's the next step. So
Okay.
The first year was always free cash flow, so targeting neutral cash on an underlying basis. If we could show that we could do that, we are doing better than we've ever done since 2021 in COVID. So it's quite a big turnaround. It's probably a $35 million cash swing, which is facts. These are in our results. And so, people were looking for that tangible demonstration that we're able to do it. And I actually think there's quite a lot more to come. I've been very active in the business, understanding every lever from, how we order our packaging, which seems very basic, all the way through to optimizing our grape supply, how we utilize our wine. So I now am clear on every lever within the business. And I think, we're just at the beginning of how we can optimize that cash utilization and protection going forward.
It's interesting you touch on COVID, because this week we saw consumer confidence at its lowest level since records go back 50 years. We know millennials, Gen Z aren't drinking as much as they used to. People have less cash, interest rates are rising, petrol prices are rising. How does all of that and that gloominess kind of hurt your business, and how do you turn that around?
Yeah, I mean, it's if everyone in senior leadership in consumer goods are not talking about all those things, you have a major problem. And so that's a big part of our kind of strategic plan, is how do we address what is looking like a downward trend on our category or our sector as an alcohol industry. But then within all those macro trends, there's always sub-stories. Yes, people are drinking less overall, but they're not drinking. So occasions are changing. The way that people are connecting over alcohol is more important than ever. So sociability, portability. So what you're seeing is people are making decisions about how they consume alcohol much more differently now than they did. So traditional forms of serve, so standard 750ml bottles of wine have their place. At home with a meal is still a very big part of the wine industry. But it's declining. People aren't opening that bottle Monday to Thursday because they'll either finish it and not really love it, or they won't, and they won't love that either. So wine has really got to start to evolve and learn from other categories that are growing. So RTDs, small format, flavored cans, where you can buy 1 to 4 or 6 or case, so it's up to you, are doing really, really well. RTD globally off a smaller base is continuing to grow. Beer's pretty flat, but still showing good buoyancy in some emerging markets because it's more social, it's more casual. So wine is a sector that we're in. We need to learn from all of these cues that are happening beyond our industry and adapt. And there is growth to be had. And I think the thing people forget is that wine, out of all of the categories within liquor, have emotional connection to people. I constantly reinforce its connection with food is unbreakable. Wine and food is a love that will last forever. And we all want to eat. We all want great meals. We've just got to be turning up in ways that people are looking for now more than ever. And I think that's been the big change in our business.
And part of that adaptation has been these smaller bottles. So Poco Vino, somewhat the star of the turnaround story. How much of your successful future growth that Australian vintage depends on this brand?
Massively.
Yeah.
I mean, I joke, I've sat with every major customer in the world and I said, I bet my career on this. Like I literally bet my career on it. I said with absolute conviction that format is one of the big solves for wine. Everything I articulated about why we do or don't open bottles of wine often are influenced by the size and the volumetric nature of that drink. We don't not want a bottle of champagne. It's just a lot of champagne. And I think where smalls have lost their way in wine is that winemakers perceive it to be a lesser quality vessel. So it will make the wine not as good, which isn't true because technology and filling technologies, the way you get air out of bottles is so much more sophisticated than it ever was. And so, what I looked at was said, okay, this is the opportunity, but it had to be executed in a way that solved problems for everyone. If you're going to solve or fulfill a need, you may as well solve all aspects of those challenges. And that's why Poco is so unique. It's skinny and flat. It merchandises on its side. It's helpful for retailers. It's aesthetically premium for consumers. It's portable for people that want to go. We've got a broad range. And the price point is not crazy. We're not asking people to pay 2-3 times what they would for a bottle of wine. It's slightly more expensive, as you would expect. Smaller things tend to be because you lose the efficiencies of kind of scale. But it looks great. And I think what we're finding is that people don't want to compromise on the quality of the thing that they consume. Just give it to me in the way I want it. And so far, it's exceeded all of our expectations. And so how important, to answer your question, it is absolutely critical. The question is not, will it be big? The question is, how big will it be and how quickly? And that's my focus.
So you don't think it's a niche market? You think this is the future of consumption? It's
the future. I mean, the UK, and the great thing about our business, people think we're just an Aussie wine business. We do over 120 million revenue in the UK. We're at the forefront of some of the most advanced and exciting consumer markets in the world. So we get trends coming in from all over the world. And so what we see is that trend is being far more accelerated in the UK. So they have dedicated smalls bays. Australia's just getting up to speed with that. They're starting to get destinations. If you see on checkout now, and all your favorite spirits are being sold in little bottles. They always were sold in little bottles, but we kind of looked at them like a gift or something we wouldn't engage with. Now they're becoming more and more the volumetric consumption of spirits because people don't want to buy a 700 ml bottle.
Yeah.
So these trends are happening in front of us, and I think wine was just very slow at looking at what they could learn and change because it is very traditional. A winemaker says a Burgundy needs to be in a Burgundy bottle, and no one questioned it.
Yeah. Well, myself and my colleague Nadine Blaney like to say that we're journalists that do the hard yards, that we do our research. We tasted some of the Poco Vino thanks to Australian Vintage and yourself, but also we went looking for it. So Nadine lives on the Northern Beaches. She said that she found it in her local liquor store and it's quite popular. She asked the retailer. I have to say in mine, I couldn't find it, but that was because the small bottles were hidden. So if that's happening, consumers can't see that. How much of that is a hindrance to people not buying things that they can't see?
It's massive. I think, the challenge we have now is not a question of, more exposure. It's about working with retailers to build destinations that service consumer shopping needs, right? This is what grocery does incredibly well. Liquor in Australia has its own retail footprint. You go into liquor stores to buy liquor. In the UK, you must go into grocery stores to buy liquor in the vast majority of cases. We don't have that in Australia. And so what that means is liquor stores have huge choice. There's a lot of selection. It's quite overwhelming, and you can get lost in that space, even with something as disruptive as Poco Vino. And so we're working with our partners, with our retail partners who fully believe in this trend and this movement to create destinations, to signpost for people, here's where you can buy one or two, you can get a light or a red together, you don't have to go varietally around the store. All of these things are inherent barriers to wine consumption. When you see an aisle of just wine bottles that all are the same except for their labels and price points and maybe a bit of regionality, you don't know what to buy.
Yeah.
You're guessing, or you go to things that you're comfortable with, and I think we've kind of really cracked that now in terms of simplifying the choice, but the job we've got to do also is to not just expand the range, but make it easier to shop and easier to find. But what I say is we're selling, more than we've ever sold that we thought we would now, and people still can't find it. And people still don't know what it is.
Yeah.
We haven't advertised yet. We haven't done any above the line. We needed to build a critical mass of distribution, and then we're going to invest behind this brand and make it mean something to people.
So maybe in a year, everyone knows what Poco Vino is. What about some of your other disruptors, Lemseco and the like?
Lemseco continues to perform. Like, there's two stories. Poco Vino, we drove distribution. We agreed with partners and went everywhere. Lemseco has just been growing organically. It's a good product because it's been made with just fresh lemon concentrate and Prosecco. So it's a very simple, natural combination that just gives a kind of authenticity. And so we've now expanded across all of the Australian retail landscape. We're also now shipping into the US. So we're in 13 states in the US now with Lemseco at $12 USD on shelf. And believe it or not, it is more economical for us to make it here, ship it there and sell it than it is to make it there and ship it out from, domestic production. So even with all this tariff talk and all of these macroeconomic issues, it is still quite compelling in terms of shipping into the US if you can get a really good kind of trade going. So Lemseco is looking really positive there. We've shipped our first 10 containers into China. So that's going through Shanghai and tier 1 cities. And so we're pretty optimistic about what that can do, but Poco is still going to be by far and away our biggest bet.
Yeah. Going back to the fact that people are drinking less and some people aren't drinking at all, do you think the biggest challenge to your business is potentially not another wine company, another listed wine company, but maybe the wellness culture?
Yeah, I mean, look, we're all aspiring to be healthier. That is a fact, but that's been a trend going for a very long time. I mean, I worked in food for a number of years, and the healthy aisle has now become just the store. You think about the growth of gluten-free, of fat-free, sugar-free, that's been moving through food. And then as it gets into liquor, what we're seeing is, yes, people are drinking less in total volume, but they're still drinking. And so even on-premise, out and about sociability, these occasions are growing. At home, with a family member, partner, over dinner, that's where the decline is predominantly taking place. People are choosing to opt out of drinking in those occasions. So there's still plenty of opportunity. And just take wine. The decline is actually being driven by Shiraz and Cabernet, so heavy reds. They're the ones shrinking. Prosecco, Pinot Grigio, Rosé, sparkling, Pinot Noir, all in growth. So at some point, wine actually on total is in growth again in Australia and the UK on the latest data by 1.2%, which is meaningful. But what we'll see is we'll actually see a faster growth once the shift between red and white kind of completes.
Yeah.
They just haven't been big enough to overcome the sheer volume of red wine that boomers drank for so many years.
Love the boomers. Look, the beer companies have done a really good job with zero alcohol.
Yep.
There's some really good zero free spirits as well. Why has the wine industry lagged? Are you working on anything like that?
Yeah, it's a big part of our mix, actually. I mean, you probably would know we're the number one still zero alcohol wine in the UK. We do 500,000 cases. Like, it's a big part of our business. High margin, it's a good product. But when I say a good product, I judge zero alcohol and its proximity to the real thing. If you're pretending to be something you aren't, you've got to get really close to that thing. Otherwise, it doesn't quite work. In beer, it's in the 80 to 90%. When you have a zero alc beer, you can kind of convince yourself you're in that occasion. With wine, it's still sub 50.
Yeah.
It doesn't have the same palate. It's a bit sweet. It just doesn't deliver as in the way that beers manage to really tap into that opportunity. So I think it's still going to be a meaningful part of the category, but not not a massive solution. The things that are exciting the wine industry are lighter wine, so mid-strength, lower ABVs are starting to get a bit of traction, but still relatively small. My view is, if you want to have a glass of wine, let's give people one glass of wine, which is why Poco Vino works. Don't cut out wine completely. Don't drink the whole bottle. Just have one. And what we're seeing is that's bringing people back into wine because they're happy to have one glass and no stress of having to finish the rest of it. So that's where we're going to see, I think, the most movement. You'll start to see brands move small as we continue to try and invite people back to that midweek.
Everything in moderation, as our mothers always say.
Yeah, including moderation.
If you were launching Australian vintage from scratch today, what would you do differently, Tom?
It's a really good question. I mean, I look back on the legacy of this business and I kind of thank, the heavens that they did invest so heavily in infrastructure. People say, to have big factories is a bit of a noose or a bit of a challenge, but actually what it gives us is an incredible capacity to service huge volume potential. So Poco, for example, we're pushing nearly 10 million units. Like our company, no other company could do that unless they were the size of us. Does that make sense? It would take them years of capital installations and investment to get there. So I kind of look back and I could criticize how big the company went, chasing that massive volume, but without it, we kind of couldn't be where we are. But if I had a clean slate, I think what I probably would have done is I would say my relationship with growers was a lot more pragmatic. It wasn't like 10-year agreements that kind of ignored how consumer trends can change in any other consumer goods industry. I think that's been a big learning for the industry, is that everyone went, maybe a 10-year deal's maybe a little bit long in the volatile nature of the world that we live in.
Yeah.
The good thing is we've got a handle on it now. Our wine supply is now in what we're calling a structural deficit. We're bringing in less than we need, which is a good thing, not a bad thing, because it allows us to get into what I call the spot wine market. So where it's finished and it's in tanks, we can draw on those at any point in time, frees up cash and working capital. So I think that part of the industry has been, I think, the biggest wake-up call to every major wine company, and would be the thing I would have focused on if I could do it again.
So you don't think Australia is producing too much wine now? I mean, there was the glut for so long.
We definitely are. I think I've heard numbers of nearly 2 billion litres of excess supply, mainly in red wine. That's going to change over the next 2 years. It sounds like a big number, and it is, but we have capacity to hold nearly 200 million litres. So if it gives you the context that there's lots of tanks and lots of space for this to be moved through the industry. We're seeing wine being pulled out. We're seeing growers make tough decisions to rip up vines. That's a 5 to 7 year investment. If you install vines, you don't see a product for 5 years that you can viably kind of utilize off that land. So to pull that out is a big commitment to go, right, I'm no longer in this industry. So that is happening. That's the sad part of a structural oversupply when consumers move away. And it's predominantly in Shiraz and Reds, places like Barossa Valley. You're reading in the press around Bordeaux.
Yeah.
I mean, there's not anything they can do about it. The flip side is Burgundy's never been more expensive because Pinot Noir is absolutely in vogue. So there's still opportunity. It's now about looking to the future and saying, okay, where do we need to secure long-term supply of things we know are trending in the right way and will for a while? Prosecco and Pinot Grigio are going nowhere.
Yeah.
Sauv Blanc and Chardonnay go through this constant kind of up and down over the decades. Pinot Noir is not going anywhere. There's a definite shortage. And so how we're doing those deals now are going to be critical to the long term, but have been phenomenally beneficial from a cash flow perspective in the short term. And so that's what we've been really focused in on.
Whether or not you like Sauvignon Blanc or Chardonnay is such a contentious issue as well amongst friends, can't it be?
Yeah.
What export markets excite you?
Do you know, that's actually one of the bigger opportunities for our business. AVL never really went outside of ANZ and the UK and Ireland. That's been the core. That does 90% of our dollars and our volume. So when I go around Asia and I talk to them about trends in spirits, I show them small formats and disruptive shelf solutions. There are huge retailers very excited about what that will mean for the industry in the Asia region. And I say Asia region because every market has its local nuance when it comes to alcohol consumption occasions, route to market, taxation and legals, marketing and cultural relativity. what we're finding with Poco is we've launched in Thailand, we're in Malaysia, Singapore, we're about to go into South Korea, Philippines. We're selling way more than we thought we would because it is a totally new way for people that are not in a mature wine market to approach the category.
Yeah.
It's fun, it's colorful, it's not complicated, and it's bite size. It's not asking them to commit a huge amount of money and drink a lot of alcohol. And so we're actually getting quite a lot of momentum because culturally, they're really open to these changes in the industry. So Asia for me is going to be a phenomenon. I think we're going to roughly call around 20 to 30% growth this financial year, but I think we could double it. These are off small bases, like 20 million in revenue.
Yeah.
The other one is North America. It's going through a phenomenal reset, lots of declining consumption, lots of pessimism around the alcohol industry. Look at Treasury's announcements in terms of their business and what, Sam, who's the new CEO there, has had to really reshift the focus of Treasury in the US because it's so big it can break businesses. But I also think it's so dynamic that it can also make them. And so we're big enough to do something in the US, but small enough to do it quickly.
Yeah.
And so Poco will run off the line in California in July this financial year. And so that's a big part of our focus for next year. If we can get a viable Poco Vino business in the US, it's a game changer for our organization. So
yeah, ding, ding.
They're exciting me.
Now, you are excited about Poco Vino, and that's a big part of your leadership, but you took over during a challenging period. How do you think your team would describe your leadership style?
Wow. Well, to my face, very complimentary, I would say. But if you were asking them in the back room, they'd say I'm very direct,
Yeah.
very hands-on.
It's a European in you.
Yeah, I think, look, very passionate. You've got to believe in what you're doing. I think that's a big part of leadership is you've got to be the one running over the hill, carrying the flag, and people have got to, want to follow you and believe in it. But also, I think I'm super fair. Everyone's got a chance to execute on the agreed strategy and get a chance to be helped along the way. But if not, I'm pretty decisive. We don't have the opportunity to make too many mistakes. We've got to execute kind of flawlessly. And so there has been quite a bit of restructuring going on through the organization. A lot of it has been focused on potential kind of new ways of working. And so it's trying to lead in a time of phenomenal change internally and externally. And I think just being transparent, totally clear, and communicating to everyone where we're going and why. And I think the response has been pretty good.
And leadership is a challenging role as well. What's the toughest lesson you think you've learned?
In leadership is you don't always know the answer. I think sometimes I would hold on to beliefs because I felt I needed in some ego-driven way to be proven right. But actually admitting you're wrong quickly in the face of irrefutable data is sometimes the best leadership trait. So I hold my opinions, but I hold them very loosely based on what data comes at me at any point in time. And I think in the past I've held on to things maybe a bit too long to the detriment of me and potentially those ideas.
And just a final question, we'll just sort of bring it back to the beginning. So millennials drinking less, Gen Z drinking less, health-conscious consumers reshaping the market, but you're still very confident that this is going to be a growth industry.
Look, I look at our business, I look at wine. We're a 250 million revenue company that has huge potential globally, has the right footprint to do new things and create scale, even in a market that might macro be coming down on certain edge parts of the industry. What that converts to is a sustainable net free cash flow company that will be reducing debt and have mobility in a time of consolidation. I'm excited by that. I look at us and go, we could be a natural acquirer, consolidator, partner. We could be the benefit of what is coming in an industry, dynamic. And so that to me is really compelling. And if all we end up doing is spitting out really good cash flow and dividends to shareholders over a long period of time because we're a good, profitable business, there's nothing wrong with that. But I think we'll be part of a bigger game. And so that's the bit that I keep kind of looking to. So yeah, I think we've got a bright future, but we had to get the fundamentals right first.
Well, cheers to that, Tom. Australian Vintage CEO, Tom Dusseldorp.